What if the smartest financial move you could make was to stop investing? That's the exact position we found ourselves in. After years of saving and investing, I discovered one key insight that completely transformed my approach to building wealth. In this video, I'll share what that insight was, why it gave us the confidence to step back from investing, and most importantly, what actually happened when we stopped investing. Did our financial progress slow down? Did we fall behind? Or did something entirely unexpected happen? The answer might surprise you because it definitely surprised us. Before I can share the key concept that completely shifted my perspective, we need to start with what the world teaches us about investing and retirement. Most schools don't teach investing as part of the core curriculum. Some advanced schools will offer elective classes and have certain degrees like finance, which will cover income, expenses, investing, and retirement savings. But that's the exception, not the rule. Most of us learn about money from our social network, specifically friends and family. We learn both from what they teach us and the examples that they set for us. I remember when my dad introduced me to the stock market when I was in middle school. He explained what stocks were and how different stocks could see different returns. Now at the time, I assumed investing was a stock picking game. 13-year-old me spent countless hours putting in random ticker symbols trying to find cheap stocks with a lot of potential. I wanted to grow the money I'd earned from mowing yards, washing cars, and babysitting. But I never pulled the trigger to make that first trade before graduating high school. Even though I now have a much different view of how the stock market actually works, I still consider myself fortunate to have parents who introduced me to money early on and supported my entrepreneurial efforts. And my experience isn't unique. Our upbringing shapes how we understand money. Morgan Housel, in his book, The Psychology of Money, explains how our behaviors with money are often driven by our childhood experiences. I've noticed a common trend in the money advice we often receive. For those of us who are fortunate enough to get financial guidance from family, the script for success goes something like this. Get a stable job, contribute to your 401k or IRA, and keep doing that until you finally retire in your 60s. Does this sound familiar? But here's what almost nobody explains when they give this advice. They'll tell you to keep saving, keep investing, and keep pushing until retirement, but they rarely show why it works. The real engine behind building wealth isn't how much you invest, it's how long your money has to grow. That's the power of compound interest. It's this simple but mind-blowing idea. Your money earns returns, and then those returns earn returns, and the process repeats year after year after year. At first, it feels so slow. In the early years, you might even wonder if it's even working. But over time, that compounding curve starts to bend upwards, and that's when things get really interesting. There comes a point where the growth of your investments adds more to your net worth each year than you could ever contribute through saving alone. Now, this is the tipping point. Your money officially starts working harder than you do. And once I understood that, everything shifted. I realized the goal was never to invest every year until I retire. The goal was to invest enough early on that compounding could take over. This is the point where your future wealth becomes almost inevitable. Not because you're still hustling to fund it, but because the growth engine you built is running on its own now. This reminds me of the line in Avengers Endgame where Thanos says, "I am inevitable." Except in this case, it actually is inevitable. Your portfolio won't turn to dust and disappear. Okay, maybe that's not the best reference. There's a name for this tipping point. When you've invested enough that time and compounding can carry you the rest of the way. It's called COAST-FI, short for Coast Financial Independence. COAST-FI means you've reached the point where your existing investments, left alone to grow, will provide everything you need for a comfortable retirement, even if you never add another dollar. It's the point where saving and investing becomes optional. While work is optional at full financial independence, saving is optional at COAST-FI. Here's the thing with Coastfi. It's different for every person based on their spending habits and the amount of time they have for their current investments to grow. So I can't tell you you need X amount by a certain age because it's going to be different for every person. But it's actually quite simple to calculate with our free Coastfi calculator. You can run your own calculation to determine how much money you need today to fund your future retirement without saving another dollar. I'll include a link in the description below. Running this calculation for yourself will give you a sense of how close you are to your tipping point. Once I learned we had reached Coastfi, I realized something I'd never considered before. The smartest financial move might be to stop investing. When Jess and I first heard about Coastfi, we were curious, but honestly a little skeptical. And skeptical might not be the best word, it's more like it made us feel uncomfortable. Stopping our investments went against everything we had been taught. We worried that we would lose momentum or that we were being irresponsible. There's so much identity tied up in being a super saver, it almost felt wrong to step back from that. But when we were looking closer, we realized that continuing to invest wasn't actually changing our long-term outcome in a meaningful way. It was just accelerating the finish line that we no longer needed to sprint toward. When we finally sat down to run our own Coastfi calculations, something surprisingly happened. Even if we never invested another dollar, our portfolio would still grow to more than enough to fund our full retirement, decades from now. It took us a while to come to grips with this reality and trust that the numbers checked out, but that realization completely changed how we thought about money, because it meant that the next 20 years of investing weren't actually required. Sure, we could keep adding more, but what would be the point? To have more money when we die? To spend more money on things that don't bring us satisfaction? Or even to retire early and never earn another dollar? Even though we are entrepreneurial at heart and would probably want to keep working on our own business even after we reached FI. When we stopped to think about why we would want to keep contributing to our investments, none of the reasons really made sense. After a couple of years of slowly decreasing our savings rate, we made a decision most people would think was crazy. We stopped investing. This was a little over 2.5 years ago. And honestly, it hasn't always been easy. We've had moments where we questioned our decision, but we've also learned to work through those fears. And I'm so grateful that we did. We don't regret stopping for a second. I'm sharing this story not to convince you to do the same. Everyone's journey is different, but whatever you decide should be an informed decision, and we want you at least to know that stopping is an option. It's not about stopping for the sake of doing so, it's about the freedom it can unlock in your daily life. Our decision to stop investing was tied to my decision to leave my day job. I needed a break from work and wanted to try entrepreneurship without the stress of replacing my full income right away. Over the past few years, we've experienced more time freedom than ever before, all before reaching financial independence. Now, my wife and I do need to generate income to cover our expenses, but that's it. And by earning a lot less income, we've gained so much more flexibility. This allows us to travel for months at a time, run a business on our own schedule, and prioritize doing work that is meaningful to us, even if it doesn't generate as much income. So I'd like to ask you, what could stopping investing mean for you? It's hard to believe it's been almost 3 years since we stopped investing. With each passing year, we've grown more and more confident in our decision because the data keeps proving our portfolio will continue growing in the long term. And that's the thing about taking a step that feels scary at first. As you gather real feedback and results, it gets easier over time. Our portfolio has performed better than expected. And if you want to learn the exact results, you can watch this video where we break it down in detail. Thanks so much for watching and enjoy the journey.